Hello everyone and welcome back to my Forex channel. I know it's been a long time no see, but in today's session I will cover how you can master entry and exit points while you trading Forex. Any trading strategy or even entering the trade requires a confident and well thought out plan. The plan or the strategy allows the traders to know at what point would be the best to enter the market and at what point you should exit. Of course, there are many different ways to find entry and exit points, but there are some basic and key things that every trader needs to take into consideration. And those key things might be in what time frame you're looking for to make profits, or if you're a scalper or maybe you are a day trader. You also have to remember that when you consider the time frame as an example, you have to consider volatility of it. And of course, by understanding the market structure, we can also identify the potential entry and exit points, but overall knowledge of how the actual market works and moves can help you to manage and control any strategy and the trade. So in this video I will cover a few examples for entry and exit points and how you can master them in a very simple way. And if you would like to join my Forex group, we have been killing and smashing the markets for the last month. You will find the link into my description box down below. I believe that most of the time simplicity always works the best, and if you think about it, simple strategies or simple rules are also less stressful and easier to implement in whatever you're doing. So the first method to spot entry and exit points is to actually use a support and resistance levels. Of course, if you can identify support and resistance clearly, you can estimate a good opportunity and probability for the best entry and exit move. So let's take a look at this example on a 1 hour chart. We have a clear bullish momentum towards the upside, meaning we would be looking only for the buy trades. You can see that the 1 hourly trend line is also indicating the buyer's move by having 1, 2, 3 touch pattern on the trend, and we can see that every time the candlesticks got in touch with the trend, it shot towards the upside. But of course, the more times of the trend line has been respected with a bounce, the better it is. So on this 1 hour chart, we can also spot our support that was respected multiple times, meaning that this specific area at which buying power is strong enough to prevent the price from declining further. And we can see that our resistance area is strong enough as well to prevent the price from rising further by respecting it multiple times. So once you're done with chart analysis, I will tell you how to spot entry and exit points and how you basically mark them. So stop loss is a must. Do not enter if you don't know where you will exit. Using support and resistance method to find the best trade opportunity, you should wait for the pullback, and this will help you to avoid falling into the trap of trading the false breakout. Pullback is a great confirmation that either the buyers, if that's a buy trade, or the sellers for a short trade, gaining control in the market. And to be more specific, we have a push and exhaustion to previous area of sensitivity before the continuation move towards the upside or downside, depending on what trades you're looking for. So we have this break through our resistance zone. We have a nice bullish engulfing candle as well on a tiny previous area of sensitivity been formed, because if you will even look over here, if we can extend this zone, this kind of previous area of sensitivity, so the push, exhaustion, bullish engulfing candle, and this is where we could enter our trade. So now let's talk how you can exit your trade based on support and resistance. So those key levels of horizontal area of sensitivity can definitely help you to plot your stop loss, take profit, or even when to exit your trade. So I marked my take profit zone based on a past moves of the price. As you can see, it's been respected a couple of times, so I marked it over here. Of course, once you prepare everything for entering the trade, you should also be aware of what you're risking. So keep your risk to reward ratio low, so like 1:1 or 1:2. Of course, all of those risk to reward ratios can be different depending on what kind of trader you are and what size your account is. So basically, please manage your account accordingly and do not over trade and do not risk more than you can actually afford to lose. So even by following support and resistance analysis in a super simple way, you can still make profits no matter what time frame you're actually using. And as you can see, based on our analysis over here, all the key levels, you can make profits. So in this case, we have 55.3 pips in our pockets. Of course, please remember that even by following the simplest support and resistance method to master your entry and exit points, you should definitely check the economic calendar before entering the trade. You should need to see how the price moves and if there is any high impact news on the trade that you will be taking on. So here is another great technique on how you can spot and master your entry and exit points, is to actually use a moving averages, and it is one of the most commonly used technical indicators because the moving average crossover can help you to determine when the trend is about to end and reverse, which will give you huge advantage for an entry and exit point. So for this example, I will be using SMA, but there is exponential moving averages, there is normal moving averages, and the settings of the indicator can be adjusted based on the market condition, your type of trading style, and there's no rocket science behind this method. But as you can see, the price was moving towards the downside because of the red SMA line crossed over the 4, but it respected support bounce of it, and now we see that the bar is getting into the market as smoothed moving average of period 4 is now starting to cross over the red one, which is a period of 9. So once you see a moving average crossover, you can start looking for a potential entry opportunity. Of course, there was a crossover over here, but there was no bullish engulfing candle, and if we will extend this resistance zone, maybe it will, respect it and shoot towards the downside. So you never know. That's why we are actually waiting for that push exhaustion to previous area of sensitivity, having a nice bullish engulfing candle or a bearish engulfing candle, depending on what kind of trades you're actually looking for, and then you entering the trade. So this is how the trade went based on a moving average crossover. So I have covered how you can enter the trade based on it, and now let me just explain you how you can exit your trade. So of course, a stop loss is a always and once again is a must. So in this example, the stop loss is slightly lower than a support, and the take profit can be also marked based on a previous area of sensitivity. So as you probably understood, the moving averages is great for entry and exit in trades. So in this example, we would be exiting our trade over here based on this crossover, because the red line of a SMA is starting to go above the blue one, meaning that the sellers are getting into the market and more than likely it will push towards the downside. We even had a bearish engulfing candle twice, which is clearly showing a seller pressure. But guys, remember that techniques of entry and exit points are pretty easy to use. The hard part is to actually determine which one to use. That's why you should try them out and figure out which one fits your trading style the best, and whatever you chose to do, make sure to do some testing to see how it fits into your overall trading plan.